SPY is trying to heal after last week's elephant bar flush, but the tape is still in the middle of a corrective process rather than a clean new uptrend. On the weekly chart, the primary trend remains up. Price is still well above the rising 200-week moving average, and the long-term structure is a series of higher highs and higher lows. But momentum has clearly rolled over. Weekly stochastics have curled down from overbought, and the weekly RSI has slipped out of the strong 60 to 70 band and is drifting back toward the mid-50s. That combination usually marks a cooling phase within a larger bull market, where rallies are sold more quickly and dip buying becomes more selective. The daily chart shows that cooling phase in sharper focus. SPY is roughly 5% below its all-time high and sitting in the lower half of the Bollinger Band structure after a violent rejection from the 688 to 689 region. The big red bar that undercut the October 10th low is still the reference candle for this correction. Until that bar is fully retraced, the burden of proof is on the bulls. Daily RSI is hovering in the mid-40s, which is neutral to slightly bearish rather than outright washed out. That leaves room for a tactical bounce without yet signaling a durable low. The 20-day moving average has curled down and now lives up near 675, while the 50-day is just overhead on the longer-term chart. Together, they frame a band of resistance rather than a place to chase fresh upside. The 2-hour view is where the trading plan really crystallizes. Price carved out a sharp low near 652 to 653 and has started to bounce, which matches a textbook A wave down in an ABC correction. The current advance is best treated as the B wave retrace until proven otherwise. From the high of the elephant bar to that 652 low, the 50% retracement sits in the 663 to 664 area, and the 61.8% retracement clusters around 666 to 667. That 663 to 667 band is also packed with prior intraday congestion, a falling 20-period moving average, and the underside of the broken channel on your annotated chart. In other words, this is the first real decision zone on the way back up. For the bullish camp, the path forward is straightforward, but not easy. As long as SPY holds above roughly 655 intraday, buyers have earned the right to probe into that 663 to 667